Hello and welcome to this episode of Inside Stream. I'm your host, Dr. Manmohan Radhesham Yadav, and in this stream, I will be talking about the upcoming IPO of the SpaceX. And we'll try to answer the question whether SpaceX is now becoming an AI company. Whenever a company decides to go public, they are required by the Securities and Exchange Commission of the United States to file an S1 prospectus. Historically, these are some of the driest documents ever committed to the paper. They are written by corporate lawyers for other corporate lawyers to ensure that no one anywhere is ever accidentally entertained. Few days ago, SpaceX filed its paperwork to go public, and reading through it, it became immediately clear that this was not going to be a typical legal disclosure. For start, it opened with 15 pages of photographs of rockets and satellites, which remind me of Adam Newman's ill-fated We Work prospectus, which famously opened with the line, "We dedicate this to the energy of we, greater than any of us, but inside each one of us." That document was later described as one of the worst IPO filings in the Wall Street history. The SpaceX prospectus is similarly unconventional. The document is also filed with phrases that "I am fairly confident," which have never appeared in the SEC filing before, under the business strategy section. Right alongside standard disclosures about lease agreements and accounting standards, the management explains that their primary objective is to extend the light of consciousness to the stars, a phrase that appears 10 separate times in the filing. Investors are also warned that we do not want humans to have the same fate as dinosaurs, which is a fair point, but it is kind of a sentence that gets you excited about what the risk disclosure section will look like. The document then goes on to outline a string of future business lines that read like science fiction. They include long-haul, point-to-point terrestrial travel, which I think means traveling around the Earth in rockets rather than airplanes. In orbit manufacturing, cargo transportation to Moon and Mars, manufacturing and energy production on Moon and Mars, and asteroid mining. Because why mine for resources on Earth when you can choose an asteroid and hope that you will find useful minerals on it? An acronym AI appears over 200 times in this document. The word consciousness appears 10 times. The word profit appears somewhat less frequently than either of those. What we are looking at it is quite possibly the most extraordinary document in the history of American securities regulation. And today we are going to go through it because every single thing that we are going to look at, no matter how absurd it sounds, comes directly from the filing. If you have been following SpaceX for the past 2 decades, you probably think of it as a rocket company. In the recent years, with the rapid expansion of Starlink, you might have updated that to a satellite internet company. But if you are reading the IPO prospectus, you are in for a surprise. SpaceX is now apparently an AI company. According to the document, 93% of the company's total addressable market is attributable to AI. And based upon the capital expenditure breakdown, roughly 60% of all spending is now going into artificial intelligence infrastructure. The prospectus breaks down the business into 3 segments: space, connectivity, and artificial intelligence. In the first quarter of 2026, the space division, the part that actually builds and launches rockets, lost $662 million. The connectivity division, which is Starlink, turned a profit of $1.1 billion, and the AI division lost $2.5 billion in just last 3 months. The only division that makes money is the satellite internet business. Everything else loses money. When Elon Musk says that this is an AI company, what he means is that the one business that actually works is subsidizing a money-losing AI venture. While he tries to convince the public market investors that the money losing in the AI venture is the entire reason the company's worth is $1.75 trillion. If you look past the talk of extending consciousness to the stars and focus purely on the income statement, the financial reality of SpaceX is bracing. In 2025, the company generated a revenue of 18.7 billion US dollars. Now, the $18.7 billion dollars seems like a lot of money, but at a proposed valuation of 1.75 trillion US dollars, the SpaceX is asking the investors to value it at almost 100 times its revenue. If SpaceX were dropped into the Standard & Poor's 500 today, it would be the seventh largest company in the index by market cap, and if you ranked it by actually revenue, it wouldn't even meet the 200th rank in the S&P 500. It would be down near the Kellogg's, the maker of fruit cereal breakfast. Unlike Kellogg's, SpaceX is not profitable. Space exploration is just a tougher business than breakfast. Last year, SpaceX posted a net loss of 4.94 billion US dollars. With what makes this number remarkable is that Starlink actually generated a revenue of 4.4 billion, my apologies, a net profit of 4.4 billion. That means the rest of the business ate up more than 9 billion US dollars in a single financial year. Since its founding, SpaceX has accumulated over 37 billion US dollars in losses, more than any other company that has ever gone public in history. And there is no sign of the cash burn slowing down. Capital expenditure has reached 20.7 billion US dollars last year. It has quadrupled from 2023, driven by Starlink expansion, Starship development, and AI infrastructure spending. To fund all this, the company is carrying out 29 billion in US debt, and it includes 20 billion bridge loan taken out in the March 2026, almost 8 weeks ago. So, when investors hand over 75 billion in this IPO, a meaningful portion of it may not be going to the orbital data centers or a Mars colony. Instead, it goes straight back to the banks who lent SpaceX money 8 weeks ago. Now, to be fair, the company is growing. Revenue is up somewhere between 33 and 43% annually, which is an impressive feat for any company. But that growth is coming entirely from Starlink and not the AI business. And even that growth comes with a caveat. Starlink's average revenue per user has fallen by around 18% since the year 2023, as the company is discounting aggressively to juice its subscriber numbers before the IPO. Back in April 2018, Gwynne Shotwell, the president of SpaceX, stood on a TED stage and made the promise within a decade. She told the audience people would be taking 30-minute rocket trips from New York to Shanghai. These rockets would compete with long-haul airlines, making up to 10 flights per day. That decade expires in 2 years, which is not much time left to figure out how to safely replace a jumbo jet with a reusable ballistic missile that requires passengers to withstand 3 Gs of gravitational forces during takeoff. Now, if you were paying attention earlier, you may remember that the phrase long-haul point-to-point terrestrial travel from the prospectus, that is this product, is still being pitched to the investors as a future revenue stream. There are no signs of a commercial commuter rocket, and there are under 2 years left on the clock. In the list of yet to be realized business lines, there is a section on payment processing. Twitter, Elon Musk's Everything app, has been talking about becoming a financial services platform for several years now. They have secured money transmitter licenses in a handful of US states, but they don't have a functioning payments product yet. So, SpaceX is now partially in the business of filing paperwork with the Nevada Department of Business and Industry in pursuit of the dream of processing an $8 peer-to-peer payment on a rocket company's social media platform. SpaceX claims that its total addressable market is 28.5 trillion US dollars. This is larger than the entire GDP of the United States and almost entirely built on a business that does not yet exist. As the Financial Times Lex column noted, the market has never before had to price a stock this speculative in size, which is probably worth keeping in mind. According to the prospectus, Enterprise applications of AI make up to 80% of SpaceX total addressable market. This means they expect large businesses to pay for Elon Musk's AI tools to improve the productivity. If you add in consumer AI, the total AI share of a claimed addressable market rises to 93%. So, 93% of the company's value is Grok. Now, what I want to be careful here, because 80% of 28.5 trillion market is an enormous number. So, it is worth asking which enterprises are currently using Grok. And from what we know, the primary document users cases for Grok are fact-checking tweets and generating non-consensual nude images that have resulted in regulatory investigations in Spain, France, and the United Kingdom, and at least one ongoing lawsuit, which is not exactly the enterprise productivity pitch that we were expecting. The filing effectively concedes that the enterprise AI market is dominated by OpenAI, Anthropic, and Google. SpaceX's own AI product, Grok, holds a market share of roughly 3.4%. According to Bloomberg, SpaceX's own engineers have been slow to adopt Grok AI for technical work because it underperforms the rival tools. Last month, Elon Musk himself said that the AI code would need to be rebuilt from scratch shortly after he sold XAI to SpaceX for $250 billion US. This solution to Grok's weakness in coding was to attempt to acquire Cursor, a tool that his own engineers were actually using for $60 billion US, with a $10 billion break free if the deal falls through. The company, whose AI products represent 93% of its claimed addressable market, has a flagship product in its own engineers won't use, and is spending $60 billion trying to buy a competitor so that they can get it to work. SpaceX's near-term AI revenue story rests substantially on a $15 billion a year deal to rent commute capacity to Anthropic, one of the very competitors whose existence prove that Grok is losing the AI race. So, SpaceX is basically Space Core Weave. If SpaceX were genuinely going to be a dominant AI company, it would need the computing power that it owns for its own models. For example, if Volkswagen were renting out its car factories, would anyone describe Volkswagen as still being in the car business? The more pressing problem is that this $15 billion a year contract, roughly 40% of projected near-term revenues, can be cancelled by Anthropic within 90 days notice. SpaceX's entire AI business model at the moment is renting GPUs to a competitor on terms that can vanish in a fiscal quarter. If SpaceX's total addressable market is 28.5 trillion and 93% of its value is based on AI, then SpaceX, by its own logic, the leading AI companies would be worth vastly more than SpaceX. Anthropic's quarterly revenue is already roughly double the SpaceX's entire AI segment revenue. Both Anthropic and OpenAI are reportedly filing for IPOs at approximately $1 trillion valuation, and yet SpaceX wants $1.75 trillion on the basis of a market its direct competitors are winning. Now, if you have been wondering exactly who is buying the Tesla Cybertruck, the SpaceX prospectus finally provides an answer. It turns out it was SpaceX. According to the filings, SpaceX purchased $650 million in goods from Tesla last year. This includes $131 million US spent on Cybertrucks at full retail price, no volume discount, which is notably given how hard Tesla found them to sell. That works out roughly to 1,500 vehicles. At one point in the fourth quarter of 2025, SpaceX single-handedly accounted for 18% of Cybertruck's registration in the United States. Using shareholder money from one company that you control to support the sales figures of another company that you control right before the companies face major financial events is generally considered not an ideal corporate governance. There is also a small accounting discrepancy worth mentioning. SpaceX reports buying roughly $650 million of goods from Tesla last year, and Tesla's own filing reports selling $573 million worth of goods to SpaceX. So somewhere between Austin and Boca Chica, a 77 million US dollars seems to have fallen off back of a Cybertruck, presumably. But a few thousand overpriced pickup trucks are the least of the related party concerns in this document. Antonio Gracias, a long-term Elon Musk ally and the sitting member of SpaceX board of directors, who also runs a private investment firm called Valor Equity Partners. According to the IPO prospectus, SpaceX and XAI are carrying out more than $20 billion in AI infrastructure lease obligations tied to agreements with entities concerned to Valor. Some of these deals are structured as what accountants call failed sales leasebacks. Normally in the sales leaseback, a company sells an asset to an investor and gets cash upfront and leases the asset back, removing it from the balance sheet. While the transaction fails to qualify as a genuine sale under the accounting rules, the asset stays on the books and the associated payment obligations get recorded as debt instead. The practical effect is that SpaceX is carrying billions in obligations to a firm run by one of its own board members on its balance sheet as debt. It's once again considered good practice by the board members who don't have 20 billion worth of high interest in financial loans with the company they are supposed to be overseeing. But anyhow, back in 2016, Elon Musk used Tesla's shareholder money to acquire another company by the name of SolarCity, a struggling solar company that he also chaired and partly owned. To help justify the deal, he staged a public demonstration of the SolarCity roof tiles during the acquisition negotiations. The tiles were later found to be inoperable and far from ready by a Delaware court. At the time of demonstration, the court reviewed the entire transaction under its strictest standard of scrutiny, describing the process as deeply flawed. Noting Musk's apparent inability to acknowledge his clear conflict of interest, and then found the deal entirely fair anyways, largely because 85% of the shareholders had approved it. The Tesla's stock subsequently went up. The judge declined to award Musk his legal costs, which is a Delaware court's way of strongly worded letter. Musk later had a falling out with its Delaware over its Tesla pay package and reincorporated in Texas. Elon Musk has now completed a structurally similar acquisition, this time of XAI in the state with far more relaxed security rules. In Texas, to bring a derivative lawsuit against SpaceX, a shareholder must now own at least 3% of the company at the current valuation, that's approximately $52 billion worth of stock. To win any lawsuit, they must prove not just a breach of fiduciary duty, but specifically fraud and intentional misconduct or knowing violation of law. A conflicted transaction, even one with no independent oversight whatsoever, does not mean that meet that standard on its own. And if you want to go looking for an internal email that might help you to prove a fraud, as shareholders did so effectively in Delaware, Texas corporate law now explicitly excludes emails and text messages from shareholders' document requests. When Tesla incorporated in Texas, Governor Greg Abbott posted on Twitter to personally congratulate Musk and wishing him well, which gives you a reasonable sense of regulatory environment. The lesson that Musk appears to have drawn from SolarCity is don't do conflicted acquisitions. It is to do them somewhere with friendlier courts. The clearest beneficiaries of this acquisition are not SpaceX engineers trying to get to the Mars. They are venture capitalists and banks, including Morgan and Stanley, who have first stuck holding billions in underwater debt from Musk's chaotic buyout of Twitter. Thanks to the XAI SpaceX merger, these lenders have been made whole in SpaceX equity, conveniently timed just before largest IPO in history. Now, historically, investment bankers won IPO mandates by demonstrating deep sector expertise, long-term advisory relationships, and willingness to work extremely long hours. It used to be quite a dignified business. The first sign of slipping standards in investment banking came in the year 2007 when Goldman Sachs bankers were pitched for the IPO mandate turned up to be a meeting led by David Solomon, also known as DJ Doll, dressed head to toe in a leisurely clothing. I want to be clear here that this slip in standards may well have been event that triggered the global financial crisis that year. DJ Diesel, the bad boy of corporate finance this time around, boasted to the press that he secured the lead left position on the largest IPO in history by having his staffers help him send Elon Musk a Twitter message on Twitter. Morgan Stanley, which had cultivated a Musk relationship for years through their star tech banker Michael Grimes, is listed as co-lead. Their name appears second in alphabetically order directly after Goldman Sachs. Morgan Stanley was apparently so furious about this that they forced SpaceX to explicitly clarify in the term sheet that the listing is purely alphabetical. 23 banks have crammed their names onto the cover of this prospectus. The fees constitute the most lucrative Wall Street IPO payday ever. The only evidence of enterprise usage of Musk's Grok AI may as well be the millions of dollars of licenses that Musk is forcing on its lead IPO banks. All of this brings us to the corporate governance structure of SpaceX, which is perhaps the most heavily fortified dictatorship ever brought to the US public markets. The company will have a dual class share structure. Regular investors will get Class A shares, which carry 1 vote, and Elon Musk gets Class B shares, which carry 10 votes each. While Elon Musk owns 41% of SpaceX, he will control more than 85% of the votes, meaning shareholders can't even fire him. The company has also placed limits on how shareholders can file legal charges. As SpaceX writes in its prospectus, this will limit or preclude your ability to influence corporate matters and election of our directors. On top of that, Elon Musk is convinced that Nasdaq to change their index inclusion methodology to win this listing. SpaceX will be fast-tracked to the inclusion of Nasdaq 100 index. This is a massive deal. The Nasdaq 100 is tracked by over $600 billion of passive investor money. By fast-tracking SpaceX into the index, countless pension funds and passive investors will become forced buyers of the stock almost immediately, long before there is a serious price discovery, and they will be owning shares in a heavily cash-burning company where they have no voting power and no meaningful ability to sue the management. Musk has ensured that he will never lose his control over the SpaceX. The filing reveals the creation of a new Class C non-voting stock. This exists so that SpaceX can acquire other companies in the future using that stock without ever diluting Musk's voting power. And if he ever decides to step down, he can place his super voting shares into trusts, passing those super voting shares to his children, ensuring dynastic control. Finally, we get to this compensation package. You have mostly read about how Musk is getting 1 billion performance-based restricted shares, and how these shares only vest when SpaceX establishes a permanent human colony on Mars and hits 7.5 trillion market cap. SpaceX explicitly describes the achievement of these milestones in the prospectus as being improbable. To be clear, this is not a sudden burst of realization of facts from the management, but instead a bit of an accounting trick. Under accounting rules, if a company admits that it was probable that Musk would get these shares, they would have to expense the full value of the award, potentially hundreds of billions of dollars, on their income statement today. By categorizing the share grant as improbable, it gets booked at zero cost. But there is a trick. As law professor Annie Lipton points out, Musk doesn't actually need to achieve any of those hard-to-reach goals, as he gets utility of these shares immediately. He can use them today, he can use them to vote today, he can collect dividends on them today. And with the approval of the board that he entirely controls, he can pledge them as collateral for loans to get access to tax-free cash today. He gets all the benefits of owning the shares immediately based on a Mars colony that the company admits he will probably never build. Now, possibly the most extraordinary line in the entire prospectus is this: SpaceX renounced certain corporate opportunities that may be present to Mr. Musk and certain of its directors and their respective affiliates. And such persons may have no duty to present such opportunities to the general public. What this means that nothing stops Elon Musk from setting up a separate private company tomorrow to pursue whatever the next big tech trend is, rather than doing it inside SpaceX. Which, if you remember him claiming Tesla was an AI company and then immediately starting XAI as a separate competing private entity, is a fairly relevant risk. As Lipton summarized, public shareholders in SpaceX will have no votes that matter, no ability to sell at a fair price discovered through normal market mechanisms, and no ability to sue company for its wrongdoings. No votes, no sales, no suits. There is one technology at SpaceX that everything else depends on. Not AI, not the satellite internet, not the Mars colony. One rocket ship, that is the Starship, the largest rocket ever built. It is supposed to be the key to everything. Cheapest launches, bigger Starlink satellites, orbital data centers, and cities on Mars. The NASA contracts. Without this Starship, the entire 1.75 trillion story falls apart. Just a few days ago, Barron's wrote that the Starship launch was a bigger deal for SpaceX than the IPO filing itself. The latest version of the rocket was supposed to be launched before the IPO filing, but the launch was postponed. It was then supposed to be launched a few days ago, the day after the filing. Nicki Minaj even turned up to watch, but there was technical difficulties according to the news. They will be trying it again sometime later. So we will have to see how that goes. The problem so far is that Starship hasn't worked. It is still in the rapid unscheduled disassembly phase of its development, and yet to carry any cargo to the orbit other than a single banana. So, a Barron's scientist states this launch is really going to matter. The entire investment thesis is built around a Starship achieving what SpaceX themselves call an insane flight rate. Hundreds of launches per year, each carrying 200 tons into the orbit. Starlink version 3 satellites, which are supposed to provide 20 times the capacity of the current models that are too large for the existing rockets and require a Starship. The orbital data center concept requires Starship to launch millions of satellites. The Mars colony requires a Starship to work reliably enough to transport a million people who I guess want to go there. And if Starship fails to deliver in the flight, and if the flight rate is half of what is promised, if reliably it is lower, and if costs are higher, the entire valuation collapses. The 1.75 trillion number assumes Starship works exactly as planned, it works on schedule and without any technical setbacks. History suggests that rockets rarely work exactly as advertised, so the company claiming to be worth 1.75 trillion US dollars is depending on a rocket that is yet to be figured out by its technicians and developers to how to land without exploding, which is a risk. Now, the IPO prospectus are required to tell investors specifically what the company will do with their money. This is called the use of proceeds. A piece of Cape Fear Advisors points out how hard you have to dig, including through the footnotes, to grasp the full picture of SpaceX's use of proceeds. The IPO is expected to raise between 50 and 75 billion US dollars. When you add up all the commitments buried in the document, the company needs approximately $235 billion over the next few years, and between 3 to 5 times the IPO proceeds at present. What this means is that the IPO is not the end of the fundraising, it is just a beginning for the SpaceX Corporation. That is all for today's video. I hope you find this information useful, and we will meet again with another video soon enough. Thank you for listening and have a nice day.